Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. Today we have two stocks, Roku stock, a Cathie Wood stock that is just reported numbers. We are going to look at the earnings later, of course. Then we have Fubo stock, a Jeremy financial education stock, a stock he thinks, or rather he hopes, he could get 1000x returns. Which stock is the right investment for you? In this video, I'm going to dive deep and explain. When it comes to stock picking, you can never settle for less. It's not like buying a sports car. You can settle for a little less horsepower for a bit more fuel efficiency, or if you prefer less power, but better sound in terms of choosing whether the car has turbo or naturally aspirated. When it comes to stock picking, you really have to know what you want and set your expectations accordingly. Why I prefer quality companies over higher upside potential with more risk. As Warren Buffett puts it, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Let's take AI chip stock, for example. Why does Nvidia stock have 94% of the market shares and Intel only have 1% market share in data center GPU market? And despite Nvidia stock trades at a price to sales ratio of 35, the stock still performs 1,000,000 times better than Intel stock, when Intel stock is much cheaper. It trades at a price to sales ratio of 1.7. Well, it's because the world's best companies, like those hyperscalers, only want the best. Because they are competing with each other on AI. Anything less would be a waste of their CapEx budget. So that's why Intel or even AMD has less order volume when it comes to AI GPU chips.
So what about the streaming business? It's a competitive market landscape, just like the semiconductor space. From the top, we are talking about YouTube, the king of streaming, mostly free and ad-supported. Then we have number 2, Netflix, with 231 million subscribers worldwide. Number 3, Disney Plus and Hulu. We're talking about over 200 million subscribers. Number 4, Amazon Prime Video. They have close to 200 million subscribers as well. Number 5 is HBO Max. They have about 100 million subscribers. Next up, Roku, which is number 6 on this list. It is precisely the point if you know Japanese. In Q2, Roku grew streaming household to 83.6 million globally. Sequential net adds of 2 million were above Q2 2023 and driven by both TVs and streaming players. Roku continued to benefit from consumers focused on value, ease of use, and choice. The Roku operating system was again the #1 selling TV OS in the US, with TV unit sales greater than the next 2 TV operating systems combined. The Roku OS was also the #1 selling TV OS in Mexico and Canada, where they continue to grow scale through Roku TV license program. They're making good progress growing streaming households in the countries that they're prioritizing across Americas and the UK. While primarily a hardware provider for streaming devices, Roku also operates its own ad-supported streaming service, the Roku channel, which adds to its competitive edge in the OTT market. The Roku channel remains the number 3 app on their platform in Q2 by both reach and engagement, with streaming hours up nearly 75% year over year.
And then we have Apple TV Plus. Subscribers around 25 million. Can you guess how many subscribers Fubo has? Not 17 million like Vizio. No, not even 10 million. Fubo TV has established itself as a leading niche service for live sports, boasting nearly 1.5 million subscribers in North America, with an average subscription fee of $85.69 per month. Additionally, it has around 400,000 lower value subscribers internationally. So we are talking about less than 2 million subscribers. Doesn't that sound like a niche play rather than a streaming play? Does this niche thing remind you of anything Jeremy invested into before? Let me give you a hint. The vegan niche play. He thought Tattooed Chef was going to be a food giant. This time, he is saying Fubo is going to become a streaming giant. Well, Tattooed Chef ended up bankrupt. I am not predicting Fubo will go bankrupt. I am just saying it will not go up 100x like he told you. And here is why. The newbie investors, they are looking at Fubo stock charts on TradingView. They are measuring the upside of Fubo stock, comparing it to its previous highs like $60 a share in 2021 or $300 a share in 2017. And right now it only trades at $1.8 per share. If it goes back to $60, that's over 3,000% profit. So it's a steal, right? Nope, don't let the chart fool you, because the stock chart never shows you how much shares Fubo's manager actually dilutes to keep the lights on.
Just take one look at the income statement of Fubo TV. You can see in 2019, the stock has only 22 million shares outstanding. Last year, it has 276 million shares. The share count 10x'd in over just 4 years. That's insane. Now it has over 300 million shares. What you need to look at is the total enterprise value and the market cap of this business. You're now paying over $800 million for a business that just lost $230 million last year in 2023. On top of that, it has over $400 million of debt outstanding. As the owner, you need to pay it back. For the market cap of Fubo to 10x, it'll be a $5.9 billion company. That will be over double the size of Vizio. While Vizio has 17 million subscribers, so Fubo needs to get to over 30 million subscribers from today's less than 2 million. That's a 15x of subscriber base growth. And we're talking about a sports niche TV streaming platform. How do you think they're going to achieve that? The short answer is they can't. The best thing they can do is to get to profitability. Why is Roku a quality stock compared to Fubo? Let's look at the share count. In 2019, Roku has 115 million shares. Today, it has 144 million shares. One can hardly notice the difference compared to Fubo's 10x explosion of share bombs. Roku stock has a respectable gross margin of 43% compared to Fubo's 12%. Roku's balance sheet is a beauty with $2 billion of cash on hand, only $600 million of debt. They could pay it off tomorrow. Compared to Fubo's completely disaster, Fubo has a debt to equity ratio of 1.58, meaning shareholders own more debt than their actual value in the company, while Roku's debt to equity ratio is only 0.26. That means we don't have to worry about a thing as co-owners of Roku Inc.
When it comes to innovation, Roku pioneered streaming to the TV. Their mission is to be the streaming platform that connects and benefits the entire TV ecosystem around the world. And Roku OS is purpose-built for TV and is updated across their global installed base on an ongoing basis to deliver an exceptional user experience. Not to mention, Roku City is always expanding. Most recently, Instacart and Roku expand advertising partnership with new shoppable formats and targeting. Instacart has more than 1,500 retail partners on its platform and is available to over 90% of households in the US and Canada. Today, Instacart partners with over 6,000 brand partners to offer full funnel advertising solutions. Brands advertising with Instacart see an average sales lift of 15% and sometimes double that. Yes, I can tell Roku is the most innovative TV tech company by far. As for Roku stock, the Walmart Vizio deal may not even go through, like Tapestry and Capri deal got blocked. This could also get blocked or take more to see any effect from it, even if it does happen. And any effect will be minimal, in my opinion. Also, if the deal does go through, who's to say Walmart, by using the Vizio OS, is going to win? When the mega tech giants like Google and Amazon, even they can't slay this Roku dragon, they are still unable to compete with Roku OS since Roku OS is much more superior and cooler. In my opinion, Roku stock is going to outperform Fubo stock in the next 5 years.
Don't settle when it comes to investing in your life and the stocks you pick. Always pick the best quality stock because you deserve better. Don't make the investment decision impulsively and pick the low-hanging stock like Fubo. The higher quality stock might need you to wait till the price comes down, like an economic downturn or a fixable mistake that the CEO has made. That will take some time to recover, but the risk and reward is much better odds in your favor. You will always win in the long run without getting lucky, even if you have shitty luck sometimes. Well, I hope you guys enjoyed today's video, and happy Halloween! Go trick or treat or go watch a movie on your Roku TV or hang out in the Roku City.
Okay, everybody. So happy Halloween from Audacious. Money Witch. Trick or treat.